It's been an insanely difficult year for Coinbase stock as investments have collapsed in the crypto space, revenue is down over 65%, and the sentiment has completely turned around after what's happened with FTX. But in this video, I want to share a contrarian perspective to all the arguments we're seeing on social media and conduct a fundamental analysis on Coinbase stock to explain why I keep buying this business and keep trusting this exchange despite what has happened over the past few weeks. Now, don't get me wrong, things can obviously get a lot worse, and chances are that in 2023, Coinbase is not going to make any meaningful net income, and chances are the stock is probably going to continue going sideways. But just because that is happening does not mean I don't invest in the business, because it is absolutely impossible to know when the next bull market will start, not only in the stock market, but also in the crypto market. And with so many of Coinbase's nearest competitors getting wiped out, there's a major opportunity for this company to gobble up market share in the next crypto bull cycle, which we know will happen given how Bitcoin has performed over the past 10 years, where we've consistently seen over 60% drawdowns and then rallies that more than make up for any of the losses we saw in those bear markets. And that right there is exactly what I want to address in this video. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to really start things off, I'm going to react to a fundamental analysis that was recently conducted by a very popular YouTuber on Coinbase after what has happened with FTX and their Q3 earnings report, which shows us that Coinbase is probably a very bad investment right now, and it probably shows us there's going to be no returns for the next couple of years, and actually there's a big high risk of a bankruptcy in the very near future.
But when you look at the fundamentals for Coinbase, I don't know. I wouldn't call them good. Here's why. All right. Hello, shareholders. Q3 was a mixed quarter for Coinbase. Transaction revenue was significantly impacted by stronger macroeconomic and crypto market headwinds, as well as trading volumes moving offshore. None of that is good. When the macroeconomy does worse, people have less money to deposit into Coinbase and they trade less. So not only do they trade with less, and then whatever they had, the value of that goes down when these currencies go down. But then they trade less to begin with because people don't like trading crypto when the crypto markets are collapsing. But it also leads to softening secondary levels of revenue. Now, fortunately, in this last report, Coinbase actually had some growth in subscription and services revenue. But that was always built into the bag. Because remember when this company IPO'd? The idea, and I said it in my video over a year ago, we knew that transaction revenue would go down because of competition in the space. But what we expected was that services like lending and staking, whatever, all of the other services would eventually pick up. So we expected an inverted, earnings growth peak here, where basically you have an earnings decline and then hopefully an explosion where you basically go from level 1 revenue to level 2 revenue. Problem is, the entire crypto market started collapsing. So when the entire crypto market started collapsing, you ended up having L1 go down, but unfortunately L1 ended up going down a lot more than expected, and the gain in L2 has been like that. So, it just hasn't been the prettiest picture, and therefore when you zoom out on Coinbase, you see, oh yeah, here's a company that was once a $368 stock, bouncing around over here at the $225 to $230 level for quite a while, and is now trading for $40.
Well, this right here is exactly where Kevin's argument really starts to fall apart in my view. You see, he's telling us that Coinbase's fundamentals are bad because the entire crypto market has gone down, which has collapsed trading revenues. Well, there is absolutely no edge in spreading that kind of information because everybody knows that. Everybody knows Bitcoin is down 70%, and everybody knows it's going to affect the transaction revenue side of Coinbase's business model. Instead, what we should be looking at is what's the future of the crypto market and how much is the risk versus the reward. Right now at Bitcoin 15,000, there's obviously seems to be a lot more risk, but when you look at the reward potential like we just saw in 2014 and in 2018, the reward potential is always 3 to 5x compared to the risk for Bitcoin. And obviously we know Bitcoin goes hand in hand with the revenue that Coinbase is going to experience. As a matter of fact, if you look at Coinbase's monthly transacting users, they have actually gone up year over year from 7.3 to 8.5 million. And the fact that their services revenue have actually increased as well throughout this time is actually a good thing. Unlike what Kevin mentioned, where you can expect Coinbase to offset all its losses in the trading revenue by service revenue, that is just not how this industry works. When you have a crypto bear market, people are not going to invest in services along with trading. There is no offsetting revenue. It all depends on how the company is positioning itself for the next bull market. That is what investors really care about. And right now, because people have lost so much faith in crypto, Coinbase stock is down multiples more than Bitcoin. It's down almost 80% and Bitcoin's down around 70 to 70%. And as you can see, year over year, their subscription and services revenue is up over 45%, which is extremely impressive given the insane headwinds we're facing with interest rates and the crypto market. The fact that this number is going up in a bear market tells you that in the next bull market, it should start going up exponentially, and that's going to start increasing the net income of Coinbase even more, because it's obviously a much higher margin product than the transaction revenue, which is what they had throughout 2021. And we all know how much money Coinbase raked in the bull market of 2021. These guys had a net income of almost $7 billion at one point, and that is solely off of transaction revenues, not even considering the institutional products that Coinbase has listed, which just goes to show you the immense opportunity Coinbase has in front of it if you believe in the long-term thesis of Bitcoin and crypto. And as for the fundamentals of Bitcoin, as you can see, the hash rate has still gone up to all-time highs despite the bear market we're seeing in the cryptocurrency space. Yes, we've seen a lot of tokens expire, a lot of brokers go under, but that is the cleansing process you need to get a more successful value proposition for crypto in the long term. You need to wipe out all the excess fat, and that is precisely what we're seeing in 2022. As a matter of fact, the fundamentals have improved, so the risk to reward as an investor has only gone up. And guess what? We have seen these kinds of price declines in Bitcoin multiple times over the past decade, and Coinbase has survived through every single one of them. So chances are right now, with fundamentals and financials that are much better than any single time in history of Bitcoin that Coinbase has experienced, chances are they're going to survive this. Now, obviously, I have no idea if the management team can position themselves properly if the interest rate hikes continue to last longer than expected, but that is obviously the risk I am willing to take as an investor. And every single time we see Bitcoin's returns go down, which is typically very rare throughout a Bitcoin cycle, we see a lot of FUD in the market and people saying that crypto is a Ponzi scheme and that they were right about not buying Bitcoin 10 years ago. Well, 10 years ago, even at today's price after the massive decline, Bitcoin is up over 40,000%. And every single time you see these bear markets, you see people panic sell and not take advantage of the opportunity in front of them, and as a result, miss out on massive gains in the following years. Obviously, guys, that's just my take on the situation, so let me know your thoughts down in the comment section below.